Welcome to your lesson of the day. It does not have to make sense. It's just got to make dollars. Make dollars, not cents. And I'm talking about S-E-N-S-E. Like, you don't have to always understand what is happening in the market and why. You've got to follow price action. As a trader, your job is to make positive trades, not to sit and explain away why the market is moving in a certain direction, why a stock is moving in a certain direction. Leave that to talking heads and analysts who want to sit and explain those things away. Hey man, I got an economics degree and I'll sit there and be like, I have no idea why this stock is doing this, but look at the price action, you've got to respect it. Mother Market does not care what you think. Mother Market does not want to hear your explanations. Mother Market wants to move wherever Mother Market wants to go. Now, before we dive into this, there is a big difference between having some kind of a catalyst for a trade and trying to explain the reason something is going to happen, right? Now, I like trades that have catalysts. Why is a catalyst good? Palantir had a contract this morning, so it was gapped up. That is a catalyst. Catalysts are good because there's more eyes on the stock. Then you've got a little bit extra volume. You want that. You want volume, volatility, price action, all that fun stuff. That's great. That's what makes you interested in the stock in the first place. But just because there's a positive catalyst and a chart looks like this on Palantir when you sit down in the morning, gap up, got another Army contract, it's absolutely flying. Does that mean that the stock should only go up today? Is that how the market works? Of course not. Now, does it make sense that something, it gets a big contract and as a positive catalyst is going to do a big sell-off like that? Now, to some people, we've seen Palantir do this before, so I was patient with longs. The answer might be yes. But it doesn't matter. If you think the stock should only go up because of the positive news, do you think it makes a difference if you're trying to buy it all the way back in? No, of course it doesn't matter. Because the market as it falls doesn't care about the rationalization. Is it falling because people are taking profit? Is it falling because the actual value of that contract, blah, 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 when you look at future cash flows is not significant? Who cares? I don't care. Let analysts try to figure that price out a little bit later. When you're day trading, the only thing you can do is recognize what is happening. So when I'm looking at that trade, I like the 52-week high, which was 25.50. My thesis was if it could hold that, I think it's good. We had a couple of good bounce trades, 25 to 60, 25.5 to 26 even. Second time, it was lower high than got out. It then tried to hold a technical bottom off the opening range, took a long there, didn't work. And every single time I'm willing to stop out. When it finally did not hold a previous low and continue the trend down, I got out of the trade. Now it comes all the way back roaring up. So great. I mean, if you somehow, for whatever reason, like 24.5 or whatever those prices are, fantastic. You have to have a technical or a trade edge reason to be taking a trade. Because you cannot be only going long because it's good news. I'm just going to go long. I'm just going to go long. Because yes, this ended up bouncing, but you know who else had good news today? A little cybersecurity company, they're not really that little, CrowdStrike, had big earnings, good guide, gapped up huge. So I showed Palantir first for obvious reasons. There was an eventual long if you just stuck with the direction of the news in Palantir. But if you simply came in and said, I don't understand why Crowd is going lower, they had a good guide, I'm going long. Lose, 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 lose. Maybe you caught a few bounces in there, but you've essentially just been getting rinsed on CrowdStrike if you wanted to stick to trying to understand Mother Market here. Now it's trying to fill in a gap. You could have arguments about, oh, it's people taking profit. You could be right about that. But it doesn't matter. Try to trade based on actual setups and actual edge, and don't get wrapped up in a thesis as to why something should or shouldn't be happening. It's not your job as a trader to figure out why the market does what it does. It can help you to have confluence in a trade. Now, if I have an idea on CrowdStrike saying this stock is at all-time highs, it's pressed too far, I think it's overbought, this is the technical breakdown for a gap fill that I'm trading, that's fine. You can go ahead and do that. And it gives you an explanation along with your technicals. But the second that turns out to be invalid, listen to the market. If you don't listen to the market, you're going to get in a lot of trouble. Never, never rationalize your trades. Because if you sit there rationalizing your fighting of a trend based on a thesis, those are usually going to be your worst days. Now, CrowdStrike, maybe it catches a bid, maybe it doesn't. I got a question today, and actually this was one yesterday as well, on Alphabet. And it was, why is Alphabet so weak? There was news with regards to Alphabet, and Meta as well, Snapchat, they're all moving pretty large, simply based on a potential TikTok ban coming through again. Now, this stock was an absolute rocket ship when that happened. Like, it was super, super strong, and it looked like it was gapping higher and going to break it back out here. That's what it looked like was going to happen on Google. The news story gave it some strength. It had a continuation. The market was strong. The market's going higher as we speak, and Google's down at the bottom. I was a believer in that. I literally bought Google in my personal account based on that. Well, I bought it off the level and based on that information. Today, the literal opposite happens in Google. So as a trader, what am I doing? Ho-hum, I'm going to look for shorts because it's relatively weak. I don't care if the market's breaking out. If I'm going to lose on a short, I want to short a weak name. And even though I thought that news was a positive for Google and Meta and Snapchat, it doesn't matter. The market is telling you that this is still a weak stock, and you've got to try to treat it as such. So try to make dollars, not cents. Worry about explaining it after. You know what? That's for your train ride at home. When you're sitting around having a beer after all the profits that you've made or whatever you happen to enjoy, then you can think about the explanations for why the market did what it did or why a stock did what it did. While you're sitting in your chair hitting keys and making trades, your only job is to understand why things are moving and why you should get in or out of a specific trade. Technicals, fine. Indicators, fine. Trends, fine. But do not try to overthink it. You are never going to be able to explain something as complex as the market and why it moves. So why bother trying? Your job is to make dollars, not make sense of the world. That's your lesson of the day, and that's the real deal.